Hello, everything is up. S&P is up, NASDAQ is up, Dow Jones is up, and the riskier the stock, the greener it is today. Literally double digits up, up, up. And that begs the question, are we out of this crazy market and are we ready for a bull run? I'll tell you, I'm definitely ready for a bull run, but is the market ready for the bull run? I'm going to read you a couple of articles from the Wall Street Journal, including some articles to do with the Federal Reserve and what the Vice Chair Brainard actually had to say of the Federal Reserve. Fed's Brainard says too soon to say if inflation has peaked. Federal Reserve Vice Chairman Lael Brainard said she expects it would be appropriate for the central bank to raise interest rates by a 0.5 percentage point at its meeting later this month and again in July. Wow, who would have thought that? But said it was too soon to say whether the Fed might slow the pace of rate rises after that. Ms. Brainard said that it was premature to conclude that the inflation had peaked and that the next several months of data on price pressures and economic activity would be important to determine whether the Fed continues to raise the rates in September by 0.5 percentage point or by the more traditional quarter-point increment. As I said, June, July, August, 3 CPI reports. I think we peaked at 8.5% inflation. We went down to 8.3% inflation. If we go down to somewhere around 8%, after that somewhere like 7 something, and after that closer to 7%, well then they're going to stop raising by 50 basis points and they're going to start raising by 25 basis points. If that happens, we will be in prime position for a bull run. That's going to happen in no sooner than 3 to 6 months, as I keep saying, and that's my prediction. And I quote, if we don't see the kind of deceleration in months inflation prints, if we don't see some of that really hot demand starting to cool a little bit, then it might be well appropriate to have another meeting where they proceed at the same 0.5 percentage point pace, Ms. Brainard said during an interview on Thursday. If we are seeing a deceleration in the monthly prints, it might make sense to be proceeding at a slightly slower pace. And she says, overall, we still have a lot of work to do to get inflation down to our 2% target. If you've been following my videos, I keep telling you, June, July, 50 basis points, September, probably 50 basis points. We got to see what's going to happen with the CPI. I do think that we reached our inflection point of inflation. And if you compare what I said to what she just said, that's pretty much in line. Let's go to the next article. The article reads, Federal Reserve's portfolio runoff has begun. The central bank is allowing securities to exit from its $8.9 trillion portfolio by not reinvesting the proceeds when they mature. How does it work? Quantitative easing and tapering. Quantitative easing is when you dump money or the money printer into the economy. Well, how do you do that? You buy assets, you buy mortgage-backed security, bonds, so on and so forth, and you put it on your balance sheet. When you put something on your balance sheet, you exchange cash for it, right? Think about it. You're buying this, you're giving this. This is coming from the economy. This is going into the economy. This is what's happening. But now we have $8.9 trillion of this, and we have a lot of money in our economy. So what we're going to do is we're going to sell our asset here and take back the money. The money is now in our piggy bank, while the asset is now back in the economy. And that's called quantitative easing when you're putting money into the economy, but it's called tapering when you're taking the money out and putting the asset back into the economy. Aren't you glad that you're pressing the like, share, and subscribe to my channel so you understand how micro and macroeconomics works? Next time you're at a party, you're going to be grabbing a drink, and you will be the life of the party because you're going to be able to explain what quantitative easing is and what tapering is, and nobody else at the party is going to understand what the F you're talking about. Let's go on to the next article. The final article reads, is the Fed finally in control? Markets think so at their peril. The belief that central banks can closely control inflation and growth remains a dangerous one. Investors may be giving central banks too much credit or blame for whatever happens to inflation. And as you can see, S&P 500 is now up 1.36%. The Dow Jones is up 0.78%. And the NASDAQ is up a massive 2.4%. There's a massive opportunity to get into stocks. Is the carnage over? I don't know. I think that we're not out of the woods yet. As I said, I will know if we're out of the woods yet or not in September. I'm watching very, very closely for the next 3 months to see what's going to happen. We could possibly be out of here. We could possibly not be out of here. I know it's not the answer that you guys are looking for, but it's an honest answer. I honestly think we have another 3 to 6 months. Like I said, I still have money on the sidelines. And if the market recovers before that, fantastic, because I've been buying on the dips. And not all my plays were at the absolute bottom, but I was at the bottom-ish end of this drop. We'll see what's going to happen. Thank you.